This is a trade recap plus a backtesting session on Bitcoin USD. Starting off with the trade on this was executed on USD Canada. Here, as we can see, or as I can see, price had hit a swing low right here, price, and then hit the second swing low here below the first previous swing low right here. Price forms a small order block on the 1 minute right here. This last move down. Price then retraces back into this order block and then breaks structure to the upside. And then here is where I entered, and I ended up putting my stop loss below here and take profit above here, this previous area of liquidity, which got hit within 10 to 15 minutes. So things that I think I did well is I waited for a swing low, which I defined exactly what that means more so than I have in the past, just kind of eyeballing what liquidity looks like. So I found a swing low, and then I found right here, and then I found a second swing low that took out that previous swing low. I was able to clearly find a candle that indicated an order block, which is this one. Price then broke out of it. Price retraced back into this candle, and then it broke structure to the upside. What I could have done better here is instead of entering off of this candle here, I should have entered off of this candle because this is when price breaks structure to the upside. And then if I had done that, I could maybe get a bit better risk to reward ratio here. Another thing I could have done is I seriously sold myself short by just placing one take profit right here. What I'm going to do next time is I'm going to, instead of placing $500 on one trade, I'll do 125 on four trades and place a take profit probably here, another one right here, another one right here, then another one probably all the way up here. And as you can see, all of these would have gotten hit easily. So that's pretty much what I would do. Another thing I would do is equilibrium was kind of vague here. That's an area of improvement for me. I don't exactly know where to place equilibrium, whether here, which I would have gotten a bad EQ, or if it's over here or here. I really have no idea. So that's something I need to work on before I start taking 1% trades, and that's why I'm still working on 0.5% trades. There was also, I believe, some noise, not high impact news, but just some news that may have shaken the markets. I didn't really look into news that much, to be quite honest. I also took this trade at 10:30. This was during I didn't really look at the session, but I'm gonna look at it right now. This was, I suppose I took this trade just out of the New York London overlap. Ideally, I would take the trade in here, but I took the trade still in during New York session, which is definitely, I'm definitely happy with that. I don't really look at sessions that much, so I really need to start looking at that as well because I feel like I can't really just gamble on just like not knowing what session I'm on, and I feel like in between New York and London session is when price will best respect or like the market will will respect price action the most, and that's when I feel like I should trade. Now, these are the 10 back-tested trades I found on USD Bitcoin. First, right here, I'm gonna go quite fast on these just because I've done many of these before, and I'm not really I'm not gonna say like the every single confluence I have every single time. So right here, this is pretty obvious. Swing high forms, price forms a bearish fair value gap right here. Swing high, bearish fair value gap, price retraces into this fair value gap. And then on the 1 minute, which I'm on right now, but this forms a fair value gap on the 3 minute. I would, and I suppose on the 1 minute as well, wait for a break of structure, which comes right here, enter, take profit or stop loss above here, take profit at a previous area of liquidity, which is right here. I could go down here or even as far down. I could go much further down, but this would be a 1 to 1.89 RR trade. Second, I could have taken a trade right here where price hits this swing low, this swing, and then the second swing low forms a order block. Price retraces out of it, comes back in, breaks structure to the upside, out of the order block, long it with take profit up here, or I hit take profit up here, but I could have done it even up here. Stop loss below the area of liquidity right here with just a little bit extra area just for comfort. And I would just take the trade off of the break of structure on the 1 minute. Some of these again, I didn't use equilibrium here, although I should have, and I don't exactly know how to do that. Once I do use equilibrium on the 1 minute, I'll likely, once I have trading view premium, I can go down to the 1 second and find a break of structure, enter off of that. But as soon as price breaks structure to the upside here, I'm in. Again, that's the one thing I need to work on is finding a perfect or like a more ideal entry and then taking bigger take profits. Here, very similar. Price is matched by second swing low, not quite exceeded, although this could be considered the first swing low and this could be the second swing low. Either way, price forms an order block, price re-enters into this order block, and then as soon as price breaks structure to the upside, which comes on this candle, high, low, higher high, I'd enter stop loss below here, take profit up here, could even be up here, up here. Um, that could have been like a 3 or even 4% RR trade. Again, even on these back tested trades, we already know what's going to happen. I still need to work on setting more ambitious take profits. Uh, fourth trade, this is price seems to form swing high here, pushes past into this order block, price retraces into this order block right here. Once it breaks structure, I would enter with uh, take or stop loss above here, take profit down here, could even go down here, although that unfortunately that wouldn't have been hit, but I could set multiple take profits, one down, one here, 50%, 25%, and then like 25%, and then two of those three would have gotten hit, so that still would have been a profitable trade. Again, this very similar. Swing low, price pushes past this swing low, forms this order block, price retraces out of this order block, comes down, breaks structure out of the equilibrium and order block, and right here's where I would enter as soon as price retraces above this candle right here. Stop loss below here, take profit up here. And because this trade has equilibrium, break of structure, order block, liquidity sweep, everything pretty much. This trade, if I had to risk 0.5% or even 1% on one of these Bitcoin trades, it would be this trade. This is probably the one that I feel best about. And again, the only bad thing about it is that I feel like when I was backtesting this trade, I sold myself short, and I could have gone up here or even up here for a 5-to-1 RR trade, and that would have hit. Here, this one, I have a swing high right here, liquidity sweep down, liquidity is swept, price retraces into this fair value gap. As soon as I get a break of structure off of this retracement, which comes right here when price closes below this low, I enter right here and um, set the stop loss above here, take profit below here, and ideally below here. Um, that's where it should be actually. That would be a 3.4 RR trade, not 2.65. Again, very similar concepts. Trade 7, this trade, price forms a swing high and price forms a swing high here, or even here, I guess it could be considered, takes out previous swing high. Price forms this order block right here. I should have marked it out. I apologize. And then within this order block, price breaks structure right here. We see down here, price closes below this low here, and then that's where I would enter. And or I don't know entirely if that's a full break of structure, but as soon as I don't exactly know what I would do in this situation, to be quite honest. Stop loss above here, take profit. The weird thing about Bitcoin is it just dumps like this. So, I would try to find if there was like a candle. Surely there'd be one or two candles, red candles in between this that I could enter off of, and then this would be up to a 7% RR trade. Um, I just don't understand why price just dumps for no reason. I would wait for a candle like right here, and then that'd be a 4.3 to 1 RR trade, and that's probably how I'd execute if there wasn't just this gap here. I'm not entirely sure why that forms. I'll have to check on it later. Here, swing low, new swing low. Price forms this order block right here, retracement into this order block. As soon as price pushes past this green candle, I would be ready to execute on this trade. I would set my stop loss below here and take profit all the way up, targeting this previous area of liquidity. And I could even do like that, which would be absurd because it's a 15 to 1 RR trade. So if I had to do a 0.125% trade, I would do it on this because this is just a this is a lot this is a big gamble, especially with such like a dump right here. So I'm not entirely sure what I would do in this situation, to be quite honest. It's easier to back test when I already know what's going to happen. So I think that's why some of these trades are kind of they're a little bit vague, and I don't know if I would trade this in real life, at least not with this absurd RR. So it could be up to 15.1, but more realistically, probably like 3% or 3 to 1 RR trade or something like that, which would be a lot more reasonable. Here, this swing high right here is taken out, forms a 15-minute order block. I'm not I'm not on the 15-minute right now. I just did all these on the 1 minute, but it forms this order block right here. You could even argue that it covers all of this, pretty much all of equilibrium. Price comes out of equilibrium. Price comes out of equilibrium. Price retraces into equilibrium. As soon as I get a break of structure, which is right here after this dump, I enter, which is out of equilibrium. So it is a little bit of a sketchy trade. Stop loss above here, take profit down here, could even be down here, could have been down here, or even lower than that, actually. So, but this again was 0.125% trade because the equilibrium makes it a little bit sketchy, and I really don't understand equilibrium as well as I thought, is what I'm starting to realize. Here, this is a live trade, or a trade that I never took, but one that I wrote down. I kind of projected where price was going to go, and I just put this marker right here. Price retraces into this, makes a swing low. Um, Sorry, I need to go on the 15-minute real quick. I'm not entirely sure what I was doing. The instructions are quite vague. So what I do see here is that price seemed to have made this fair value gap, and interestingly, price pushed past it. I'm not entirely sure what I was thinking, but I'll have to go on the 1 minute and see if this um trade I took or didn't take, but this trade makes more sense. So price made the swing low, and price made the second swing low right here. Formed this order block on the doesn't really work on the 1 minute, but on the 3 minute, it makes this order block right here, which price retraces into, I believe, right here on this one wick. And that's where I would enter when price retraces, break structure to the upside, and then, so it would probably be up here. And then stop loss below this area right here, take profit up on this level, and that would have gotten hit. And something I could have done better again is refining exactly where I would enter. And I could have set my take profit all the way up here, maybe even up here, to be honest. Or since if I'm when I'm just looking back in hindsight, I bet it'll maybe even hit it'll likely even hit all the way up here at a 9-to-1 RR trade. So overall, some things I've learned is that I need to set bigger take profits and likely set multiple take profits where I take multiple trades and then distribute the same percentage across multiple trades with different ranging take profits. So overall, it was a very productive day, and I'm happy with my 0.5% gain. And I think that maybe if I win a few more 0.5%, I'll have the confidence to move up to 1% trade on USD Canada.